Hey everyone, Nick Fenton here with TickerTank.com, and I wanted to discuss Iron Condors with you today. Kind of look at the chart, determine why you would want to enter an Iron Condor in the first place, what to look for on the chart, and then show you how to set it up in the ThinkorSwim trade page, and kind of how to analyze it real quick from a probability of success and looking at max gain, max profit. So here we have a chart of the Qs. This is QQQ. It's a 1-year daily bars chart. And what you see here on the 1-year chart is, Qs have 1-year high at around 60. So 59.83 to be precise, but right around 60. We do have quite a bit of resistance right around 59.25, but 60 is the high, and quite a bit of resistance there. We're getting close to this 60 level at 58.60, so likely to see some resistance here in the very near future. Now, recent support has been right here around 50. So we may come to determine that we think SPY is probably not going to break above this 60 price point, and may fade back here and start taking a little bit of a breather after this recent upside move, or may even come back down and challenge this 50 support again, which is a little less likely, but anything's possible in this market environment. So all in all, we just want to position ourselves in a manner that will take advantage of a wide range base in QQQ. And our base that we've determined here is we'd like to keep it between 50 and 60. And keep in mind, this is just a theoretical trade. This is not a trade that we have on or a trade that we're putting on. We're just using this as an example. So we come to that, we say, okay, we want the range base between 50 and 60, stay profitable between 50 and 60. So we go over here to our trade screen in ThinkorSwim. The Qs are already pulled up. We want to pull up the NOV 11s. Not these two up here. This one's the OCT4 weekly. OCT4 just means it expires on the 4th Friday in October, which is 1 day away. And NOV1 means it expires on the 1st Friday in November, which is 8 days away. We're looking at the regular November front month options at 22 days until expiration. So drop those down. Then choose here Iron Condor. Now we know 60.61 is the upper area. We're selling to open this, so we click on the bid on this one that shows 60.61 on the call side, and we'll go over why here in a minute. So it brings us down here to the trade page. It's got it all set up for us as 72 credit. Let's right click on that, analyze duplicate trade. That brings us to this screen. Well, our upper max profit range is 60, but our lower is 59. We wanted it to be 50, right? So let's drop this short put all the way down to 50, and then change the long put to 49. That gives us the range we wanted. Max profit between 50 and 60. So as long as Qs stay between 50 and 60, we're going to be in max profit range on this Iron Condor. Alright, and essentially this is just a vertical, a bull put spread and a bear call spread put together. So two vertical spreads put together. What you can see here is on the bull put spread side, we have sold the 50 puts and bought the 49s to kind of define the risk on the downside. So we're saying in this case it's bullish. We want it to stay above 50 on this put spread. And on the call spread, we've sold the 60 NOV calls and bought the 61s to cover on the upside, define the risk on the upside. So in this case, we're just saying we want it to stay below 60, but we're defining our risk by buying that 61. So essentially, you put these two together, and you're saying, okay, I want it to stay above 50 and I want it to stay below 60. Those are my two max profit ranges. The next thing we want to do is go up here and make sure the probability of date is on November expiration, which I always go to the Saturday versus the Friday to make sure that all the premium is out of the equation. So click on that NOV 19, go down here to set slices, go to break even, and make sure you choose 11.19. So that's going to put the slices on the upper and lower break even. I'm sorry, I need to unlock this credit because it's still on 72 cents. Unlock that to reflect the accurate price of this adjusted spread. So you can see it's 34 cents. So you're going to get a credit of 34 cents. $34 per Iron Condor you sell is your max gain potential. So let's reset the slices. Go over here to break even, 11.19. All right, brings the slices in. So now that we've got these slices set, we can say to ourselves, what do we have here? Well, first thing we have is a 67% probability that this is going to, the Qs are going to stay in between break-evens. So we're going to be at break-even or better, 67% chance. About a 33% chance that it's going to be outside our break-evens. And you can see the majority of that percentage of being outside is on this upper end, which may tell you need to skew it a little bit more towards the bullish side, but that's not for this conversation. We're just looking at a theoretical opportunity. So our upper break-even is 60.31, lower break-even is 49.65 approximately. Let's go over here to the chart. We say, okay, change it to the oval tool. Upper break-even was 60.31, and we're looking at November 19th. So here we are on November 19th, right around here, November 18th, 60.33. So we just kind of make a note that right around there, and then 49.65 on the 18th, right around here. So there's our two break-evens, approximately. It's not the prettiest drawing, sorry about that, but it gives you a good idea. And you can see the break-evens are just above resistance and just below the support that we wanted. Now our max profit is right at 60 and right at 50. So as long as the Qs stay between, stay at or below 60 or at or above 50, stay in this range, we're in max profit. What is max profit on this trade? Let's find out. So this red is representing what this spread looks like on expiration Friday, and this white is more of a real-time representation. So what the spread looks like right now, how it's priced right now. And this tick right here, you can't really see. It's hidden behind this red dot or red line. There's a little tick that shows you the current price of QQQ. So right here you could see max profit, this is per spread, is, if you look down here in this area, max profit is 35 bucks. So we'll lock in this 35. 35 bucks. Let me split the slices again. Alright, so 35 is max profit, and that's if we stay between 50 and 60. If we start going below 50, we start losing money until we hit the break even of 49.65. Once we get below 49.65, we start losing money, and it start being at a loss until we hit our defined risk area of 65. So 65 is the most we can lose, 35 is the most we can gain. Again, let's look at this range. Once we get above 60, we start seeing diminished profits, but still profitable, until we hit our break even at about 60.35. And then once we get above 60.35, we start to see a losing position, and max loss again is 65. And so at or above 61 is max loss price point, loss of 65 bucks, or at or below 49 is max loss price point of 65. And that's based on pricing at expiration. One note, two things to remember here. I personally never sell Iron Condors unless it's a very liquid options market. The way I determine the liquidity of the options market is I go over here to the underlying, in this case the Qs, I switch it to the single, and I just click on the closest to the money, put or call, bid or ask, doesn't matter. So let's click on the ask of the puts. And you go down here, you see the mid is 151, the nat is 151, so you've got a very liquid market there. You can just look at the bid-ask spread up here, and you can see that the bid is 151, the ask is 152. So we've got a 1 cent bid-ask spread. Very liquid options market. I don't like it to exceed 5 cents bid-ask spread when I'm doing an Iron Condor, unless I'm doing something like Goog, which is a very high-priced stock. Still a lot of open interest, a lot of volume in the derivatives. Two, I never go below 1/3 the width of the spread. So in this case, when I say the width of the spread, I'm not talking about 50-60. I'm talking about the width of the spread on each end. So the width of the verticals. And here we've got a 49.50. Up here we've got a 60.61. So the width on both ends of these spread is 1. I never want to go below 1/3 of the width, which is 33 cents. 1/3 of 1 is 33 cents. In this case, our credit is 35 cents. So it passes that test. So it passes the derivatives liquidity test, and it passes the minimum credit required test of 33 cents. So this is a spread that I would definitely consider putting on. Passes the test. But again, this is theoretical. I'm not putting it on, not sending it to members or anything like that. Just using it as an example. So hopefully that answers some questions you have about Iron Condors. just to reiterate, Iron Condors take advantage of a sideways trend, and you can make the range as wide as you want. It just depends on what your analysis is on the charts. In our case, we saw resistance at 60, support at 50, so we wanted a play that took advantage of that.